I literally every other day am speaking to the world's largest financial institutions who put me in front of their investment committees and talk them through crypto and how to invest. And the narrative changed. It really surprised me. It was always Bitcoin, can we put Bitcoin on our balance sheet? How should we invest in Bitcoin? What's the diversification? Moved very quick to, look, Ethereum feels like it's a technology play that makes sense with the applications. We're interested in DeFi, etc. Then it very quickly became, oh shit, how do we get involved in Web3? So it moved very fast, which is why in the end VC got most of the money.
Real Vision CEO and popular Ethereum bull Raoul Pal has once again described his journey to Ethereum and why he thinks the crypto is about to grow exponentially. In a recent interview, Raoul Pal explains that there is a huge narrative shift going on in the crypto ecosystem. While Bitcoin used to be the sole point of focus for institutions and investors within the space, Raoul says these institutions and giant corporations now see the opportunities abound in the many use cases of Ethereum. He adds that moves are being made under the radar, but when prices go up, there would be a mad dash for the second biggest cryptocurrency as investors' massive FOMO in.
Well, my views on Bitcoin changed significantly. I don't think, no less of it as an asset, but I thought about it in network terms and the community, and I thought the community is not attracting new people. And the job of a network is to attract new participants. And if the network was actively rejecting people, I thought it was going to underperform, which was surprising to me because I was very bullish on Bitcoin first because I thought, look, it's going to have a larger place. And what's happened is almost immediately, and it made me change my mind, is the institutions started going, well, I actually don't like this space. And they started buying ETH. They don't want to own an asset where everyone's shouting, have fun, stay poor at each other and putting laser eyes. Right? Makes them look fucking stupid and irresponsible with their money. Well, ETH feels like it's a technology play. Yes, it's amusing because everyone's saying GM to each other and all of this stuff, but it's not at war. While Bitcoin was at war with every other network because, that's what networks do. Religions go to war with each other for the same reason, right? They're exactly the same principles. So, it's the same reason Russia and NATO, they're all the same. They're all networks fighting each other for the robustness of their own network. I get it. So that whole process of seeing institutions getting turned off by it was a big deal to me. I just thought, I don't like this either. So that was one thing. I'm trying to think.
Well, on that point, you've seen a lot of news about institutions buying Bitcoin, whether it's Tesla or MicroStrategy or Square or, some random insurance company buys $100 million worth of Bitcoin. So we've kind of heard those. We hear less of that with ETH. Is it just going on under the radar? Is it coming? What's your sense of that? Because I'm in this space and I haven't heard a ton.
It's happening below the radar because people keep coming to me saying, when's this wall of money? I'm like, it doesn't come as a tidal wave. It comes as a flow, right? You don't see it until you look back and go, wow. So, I literally every other day am speaking to the world's largest financial institutions who put me in front of their investment committees and talk them through crypto and how to invest. And the narrative changed. It really surprised me. It was always Bitcoin, can we put Bitcoin on our balance sheet? How should we invest in Bitcoin? What's the diversification? Moved very quick to, look, Ethereum feels like it's a technology play that makes sense with the applications. We're interested in DeFi, etc. Then it very quickly became, oh shit, how do we get involved in Web3? So it moved very fast, which is why in the end VC got most of the money because they saw the broader opportunity. They all came through the 2020 lens of Bitcoin is the asset and, the Michael Saylor route. And even me, in the earlier part of 2020, a lot of people came in that. And then like all of us, they kind of go, oh, wow, okay, this is much bigger. So, I've started a fund of hedge funds, which is invest in crypto hedge funds to allow institutions another way into the market because they don't really want to buy just ETH or Bitcoin. They want exposure to this $2 trillion asset class is going to go to 200 trillion over the next 10, 12, 15 years, whatever the number is. So hedge funds are pretty good for that because their job is to manage the exposure and to capture this big move. So, that's another way that it's coming in that people don't see. It's not all about the Bitcoin ETF. I don't think that's going to move the needle as much. It'll be positive, only in a positive market. I'm seeing institutions using this weakness and not being frightened by it. So they're like, look, this is fantastic opportunity. I need to use this. I get it. It's a volatile space. They understand. The people who are trying to put capital to work understand. But once the price starts going up again, then you'll see the stampede.
Right.
You know, if Bitcoin's at 65,000 or 70,000, then people say, okay, we've had a year-long correction. It's now going up. Next phase is going to go to 150,000.
Right.
And they'll be in. And they'll be in, and there'll be a mad panic because they've all been doing the work over the last year and a half. So they'll be like, we've got to get in now, Because if they don't, they miss the outperformance of their peers who've got it.
There is more to unload from Raoul Pal, but before we get into the second part of the interview, ensure you smash the like button. It is free, and it contributes immensely to the channel's growth. Thanks. Raoul Pal talks extensively about the opportunities in non-fungible tokens. He explains that Ethereum brought the magic of smart contracts, which already have and are going to have many more use cases. When we talk in 10 years' time, we'll go, oh my God, we didn't see that coming. Raoul exclaims while talking about the possibilities that can be unlocked with smart contracts. On NFT, the macro investor states that they solved the crucial problem of value retainment in the digital space. He explains that in a digital world, everything goes to zero. So in our increasingly digitized world, there is a need for an asset class that cements scarcity, thereby preserving the value of assets. According to Raoul Pal, NFT provide a viable solution to the problem.
So Ethereum introduced a piece of magic in a smart contract. A smart contract attached to a blockchain means that any contract in existence can now be attached to a blockchain. And smart contracts allowed an algorithm or a calculation to be made automatically and verified on the chain. So that could be your insurance contract for your house. It could be any of the contracts. I mean, if you look around you, almost everything that we have in life is a contract. Mm-hmm. Whether it's a spoken contract, a written, me appearing on this together with you is a form of contract, right? So all of these things are contractual relationships that are everywhere. What this was saying is we can record all of them and verify all of them. Okay, so that's a really big concept beyond which most people understand. And you can understand that, okay, if that's the case, then a house can go on a blockchain. Yes, because the deeds, and then you don't need a notary, and then you don't need lawyers, and there's all of this stuff. Right. Most legal stuff can actually go on this. And then the breakthrough is that, okay, we've got another thing that's going on in digital world, which needs solving. So this contract thing is a big deal. We don't even know what this means yet, right? When we talk in 10 years' time, we'll go, oh my God, we didn't even see that coming, right? So that's all happening. And DeFi is that. There's contractual obligations between borrowers and lenders. It's all happening on chain. But what the average person is seeing is a different breakthrough that came out of this whole concept. Is in digital world, everything that gets digitized goes to zero in value or cost. Everything, right? The price of data, the price of everything is zero over time. So that's a big problem if you're living in an increasingly digital world. So how do you cement digital value is you have to introduce a system of scarcity. And an NFT allows a digital asset to have scarcity. Okay, breakthrough. Now, it could have come from the music industry. It could have come from a number of different places. It ended up being the art market. Okay. And where you can say, this stuff that was basically worthless online. I mean, Getty had bought a bunch of image rights, but to police it is really bloody hard as well. So, okay, now we can create a one of one of value or a number and do that. So that becomes the value of an NFT. The next part of an NFT that you say, okay, well, if we give a bunch of people these, we can now identify a community. And then these people can be like-minded communities because they coalesce around an idea, which is this piece of art and this community, which is Bored Ape Yacht Club or CryptoPunks. So that becomes incredibly valuable. It's a membership to a club, and it's your identification. It's showing your Rolex, and it's all of that stupid identifying tribal stuff that humans do endlessly and always have and always will. So that's going on, and it allows us. Don't forget, the internet had taken us from our towns, villages, families, which is our social structure, and thrown us into a big shouting room from people all around the world with different views, right? It's quite exhausting. And we all wanted a place. And what this is giving us is these little digital communities, sovereign states, villages, towns, cities, where we can now operate with civically minded people within that. And these tokens are the identifiers. Social tokens are the big thing. They're not they've only just started. That's much bigger, I think, than even NFTs are. But let's start with this, because this is a way of coalescing humans, because humans like these kind of identification, system of shared values, that kind of stuff. So NFTs are a lot of things. That's why they're so big. And again, that's just scratching the surface of what this is. It can also and will also be your digital identity online.
Before we go, let's take a quick look at some of the recent developments in the Ethereum blockchain and how they might indeed support the exponential growth of the cryptocurrency. First, there is the important issue of high transaction costs, which is what many investors have against the network despite its many use cases. Fortunately for users, the problem is being adequately handled. As of March 1, 2022, Ethereum network fees were at a 6-month low. At an average of $10.26 per transaction, it was 80% cheaper to transact with a crypto than in early January when fees were at an average of $52. Though it might still be considered a high fee compared to Layer 2 solutions, it is considerable for large transactions. According to the creator and co-founder of the network, the team is also working on fixes for the low transaction speed. We must consider the fact that the network has continued to grow in spite of these problems. If they are fixed, coupled with the network's many use cases, Ethereum could very well be on its way to exponential growth, as Raoul predicts in his interview. What are your thoughts about Ethereum, the network growth, and Raoul Pal's prediction of exponential growth? Please drop your comments in the comments section below and remember to smash the like button. Thanks for watching.